Hey guys. All right. So we were able to actually figure that out, how to get that going. And looks like we're good to go here. I'm just going to check the sound and we'll go from there. We have a lot to cover, a little time to do it. A lot of moving parts from last night, and we can go from there. I personally think what we saw last night gives you a real clear indication on what's going on out there. So we're going to just start with the basics. And I think that this is where we should really go. And we're going to start with, I actually think we should start with Bitcoin and clean this all off and start over. So, and then we're going to get into the indexes today and just give you a good sense of what's really going on out there. First and foremost, I'd watched last night's video. There's a lot in there. It might not seem like it, but there is. And I think it's really important that people watch it. I don't know why it's pouring like that. That's exhausting. There we go. I mean, who makes lids like that? Sociopaths. All right. So if we look at this, you can already see the declining 12, 22, and 55. That's what I use. What a lot of people will do, and I don't think it's wrong, is, a 3, a 5, and an 8, and then see how that's going and see if you're getting any kind of turn with it. And then we'll go from there. So I really think, hold on a second here, make sure it's done, and then we'll go from there. I really think that's very important for people to get. You're going to want to start using shorter term indicators for trades. And I'll explain why I think that is, and I'll explain why I really think, I don't know why it's giving me that date. I really think that makes the most sense for people. And here's how you have to look at it. Hold on. Let's do it this way, because that way you understand this. If I'm to look at the market, this is what your market looks like. And let's put the 200 in. So no matter how you feel about the economy, the market's going higher, market's going lower, this is what you're dealing with. No matter how you look at it, this is what you have. All right. So from 24 on, this is it. This is what we have. It's not ideal. So you have to understand where you are, right? So you start tall, 34,000 feet up, and then you go from there. Now, some people will use the wick. Some people will use the body. I get using the body because I don't care about rejection. But if I look at that, you have a 12, a 22, and a 55 here, and you're going to buy the index and everything's fine. Like, I use my best Morgan Freeman voice. Everything is not fine. So you have to understand where you are, right? Now, if you take that for a second, and that's what I want you just to preface this so you kind of get where your head really should be. And you start seeing like the negative divergences here. It's finally come home. It's time to roost, get washed out. And this will present for people huge opportunity, in my opinion, on where to get involved in the market. But don't get it twisted. You can absolutely come up, fall right back down. Once you've broken these levels, like you broke here, you see this trend line right here, okay? Once you break this kind of stuff, like, that's it, it's on. So you have to allow it to reset. And to try to out there catching it is just silly. Just let it implode, just step out of the way, let it all burn, and then go back and take a look at it. You just make more money and just short. But anyway, if you understand where you are and you understand the long-term trend there and the long-term trend in the NASDAQ, then you understand that when you're looking at stuff like a Bitcoin, for example, and you're looking at it from this perspective and it's rolling over like this, well, very simply, all you need to do is just go, oh, okay, well, I got the 12, the 22, and the 55. It's pointing down. Well, the short-term indicators are your counter trends to what the longer trend is. And when you understand that, you're just like, oh, okay, well, that means I got to make my money and I have to get out of the way because the counter trend is here. And that's what you're going to start seeing. So, like, is Bitcoin going to get through this 94, 95? No, it completely rejected it. Like, it completely rejected this level on Sunday night. And, oh, did we take this out? No. Are you starting to shape here, up, down, lower, high? Yeah, for now you are, unless you break right here. And you can actually use this one right there. It's actually perfect because you can see bonk, bonk, breaks it, lifts. But right now you have a 5 that's pointing up. And you have the 8 and the 3, which are right here. So I have a 3-5 cross. So if I'm to look at this, I'll just show you like a real quick way to do this. Let's get rid of this. And this is the 3, the 5, the 8 on a 15-minute chart. On a daily chart, this is them in motion. And if you look at this and go, well, do you want to buy every single time that this crosses there? Maybe not. Maybe you don't do that. But if you have like washout rallies and washouts and you don't take lower highs and you don't take out lower, not making lower highs or you're not making lower lows, maybe you do look at it and say, okay, well, that's interesting. And the further the dispersion, the better the trade. So, because it just means it's moving faster. It's not rocket science. Same thing here. When it broke, like that was it. So when you look at this kind of stuff, you go, oh, okay, well, that makes sense. That's how you should be viewing things. So like if you're looking at names like take NVIDIA and you're seeing stuff like this, like you got to go through it and go, okay, well, I may try to counter trend this. And I am just going to be blunt, trying to counter trade it because I think it's washed out on some other metrics. But that's a trade that is contra to what the heck is going on. So if I could just get one thing out there, you have to understand where you are and then just counter trend trade it. So like things like MSTR and the way that this rallied yesterday and whether this opens up or falls apart and goes flat by the end of the, before we even open, it very well could. It very well could happen. I mean, that's the kind of market you're in. But you start looking at like, okay, well, here's the 5. All right, so if I pulled all the way back down to here, then I'm okay. Right? So this is the kind of way that you need to start looking at things and then making more informed decisions. If I could give you anything, it would be that. So when we start looking at things like Bitcoin, that's where my head goes. And I think that that's how you need to view this market. You need to look at it from a shorter term contra trade or counter trade perspective. So when you're looking at like the ES, for example, and you're looking at these moves, like you're not going higher, you're going lower. And nothing right now, in my opinion, are you going to see that's going to change that. A matter of fact, the data that came out, I'll just show you this because I clipped it to save us time because just for time's sake, is probably one of the reasons why this stuff is going to fall apart and maybe not even open up the stuff that was bidding up. So here's ADP employment. That number is 77. That's your previous number. This is 140. ADP employment, all they do is their books. The average person that has an account at ADP has 30 employees. So it's small businesses. Small businesses employment change is half of what they thought it was going to be. Half. So when you start seeing things like the Atlanta Fed that's imploding, right? And now and it is dropping, but it's way off, but it doesn't matter. It's the direction that it's going. That's all that really matters about the Atlanta Fed. So, I mean, 6 weeks ago, they said it was 4%. We were never getting there, but it doesn't matter. The thing about it is when you see this, you have to understand like this is bad. And so you're going into Friday and you're going to have non-farm payrolls. I mean, do you think there's more jobs at like the days of stuffing non-farm payrolls with government jobs is not only over, it's inversed. So like you're going to get a real number. All right. Okay. You're going to get a real number on Friday. You're going to get your first real non-farm payrolls number on Friday that you haven't seen in some time. And I think it's going to be way worse than people think it is. And this is forecasting that. So that's why you're seeing like the ES do what it's doing right now. So from that perspective, when you look at the ES and you just watch that level, just watch it. Just make sure that, I would mark this off like I would mark off everything else and just mark that level off and just make sure that you stay above it. But this is one of the core things that A15 year. So that's one of the core things out there that I would be paying attention to. In regards to yesterday and the Qs, to me, I actually think that we'll go to the 15-minute on this for a second. I actually think this is trying to hold that level. Now, my initial response is that data that you just got was bad. So there's not really much more for me to say about it or to do about it, except understand that that data was bad. And I think that the market's going to come in on it. It's at least going to retest this level, I think, is where my head is right now. I think you retest this at a minimum, if not go lower. And what the other thing you're going to see is now you have new games in town because you have areas like the DAX and all this other stuff that's going to come out and they're going to get the money. They're growing. Germany's growing. We're going through austerity. He doesn't really want to say it. He doesn't really want to say what he's doing, but that's what he's doing. We're going through austerity. So with all the cuts and everything, I mean, that's really where this is all going. So please understand that. And it is what it is. And we'll go from there. So I don't really think that you should be thinking about the market anywhere more than that. That the NASDAQ, any rally in these are technical bounces. And your hope is that you hold that. And if you don't hold that, you have a problem. In the meantime, you had some earnings that came out like Crowd, which weren't, they weren't great. They were okay. And I think businesses are going to like hold off on spending, quite frankly. And the guide was not great. It was okay for the year, but they're saying the year is going to be better, but they're going to spend a lot of money in the first quarter of that year, and therefore earnings are going to be off. Okay, let's not do that. Like, it doesn't seem like this is the time to do that. I'm not running the company, but no, that's not going to go well. CRDO is really interesting because they crushed and they raised guidance. So whenever I see this, it just reminds me that like sentiment may have changed and that we just might want to stay out of the way. I would take my read on sentiment today really from Bitcoin and what Bitcoin does. And if I look at something like this and how this is going, well, this is pretty much telling you everything you need to know, right? From where you are from 745, and then you start looking at the 807, and then you start seeing when you started to break down here. You started breaking down at that 815 level. And since then, this is what you're getting. And I don't know that that's going to quite candidly change today, like on that number. That was a really bad number. So this is what you're getting right now. And maybe you bounce, maybe you don't. Target, Walmart, Ross Stores, like Ross Stores was soft, and now you get a number like that. I don't know how this thing's, even holding up. But I do feel very comfortable in saying, like, if you bounce today on that weak number, maybe the bottom is in. But understand, you got to test some of these levels. So that's really where my head is when I look at some of this stuff. Like, I don't understand how you wouldn't understand that you have to test some of those levels. And that number is really bad, and it's going to scare the heck out of everybody. And now you have a new game in town because Europe's on fire. I mean, you're literally like the DAX is going to go higher. I don't see how it doesn't. So, I mean, European spending over there. The other thing you're going to see by that ADP number is, financials broke yesterday. So we've been talking about this and like, do financials need to hold? Financials broke. It is what it is. And, we'll go from there. I'm going to take a bunch of questions today because I didn't do it a lot yesterday. And then we'll go from there. So let's get to it. Good morning. I own EUAD. I just think it's an absolute layup. Like, I really don't understand why anybody wouldn't own this right now. I mean, Germany just got a blank check to buy Europe. So MOBTI, these kinds of names, no. Because you're already selling the TLT. They're already selling yield. So I don't know. Anything that reversed like this, I wouldn't touch. Anything that reversed like this, I just wouldn't go near. I think you have to be super careful about what you're in here until this figures out which way we're going. The EUAD to me, it just makes so much sense because it's not going to stop. Like, this might come down, it might bonk around, but it's not like you build a tank in a day. Like, this stuff is going to take years to build. This industry is just getting started. I see why you like this, and it's not like it's a 3x ETF, and I have to worry about how that's going to play out. I really don't. I don't have to look at it that way. Give me 1 second here with this. I want to throw this in here. I want to throw this in here because I have a big position on. So I just want to see what's going on with the price. Bear with me 1 second. All right. Actually, I can just do this with it, right? And just throw it there, and then I can just watch it. Just let me know if you do that, and then I can go from there. All right. Yay. And all right, okay, let's get back to it. So yeah, I do. I like it a lot. I have a position in it. Good morning, Cam. Netflix. Yep. I mean, I think names like this make a lot of sense. I really do. I like anything like that, like Spotify or any of these names. Any of these names like that. I actually like Spotify more here than Netflix, but I think you have to be careful because, you know, I don't know that if we fall apart, they're going to have any mercy on any of this stuff. So when I look at something like that, like I don't tend to buy names that have a 12-22 cross to the downside. Like I tend to not do that. I tend to avoid those. I have more interest in trying them like, oh, you're over the, you know, the 12-22 cross here. Oh, and you're holding there. Like I might buy that and then use that low as a stop on the trade, and then kind of go from there. And then, you know, maybe pull some money out, maybe use the 12 as a stop, maybe you don't. Either way, you're trying to make something on it, right? And go from there. I think that's way more important than trying to catch a bottom right now. I'd be real careful of that. See, the thing that you kind of have to think about with all this, it's one big trade, right? So here's the VIX, and you rallied yesterday, and then you came back. You're over yesterday's close already. So this is telling you, you know, it's telling you that you have an issue. It's definitely telling you that you have an issue. This is going to be an issue. I can already see it coming. See how it rejected right there? You got to get it over. So, all right, let's keep going. I'd be careful with that, Cam, until you're set up. I really would. What do you got? You know, I mean, if I had to go out there and say, like, where do you go? I really don't think there's anything that's safe right now. Like, I just don't feel that way. I don't feel like you want to do a lot. I don't know enough about this story to talk intelligently about it. I don't like markets like this when I can't even rely on certain things. Like it's like we're standing on quicksand every moment. If I had to tell you, like, what theme do I see? I personally think the home builders are washed out and that they're going to be the next group that moves. I think you have to think super long term though about like nail and this stuff. But I do think that like you can't go near the Home Depots though. You can't go near the Lowe's. Like you can't go near this stuff. So like when you look at something like a Ross Stores or any of this stuff, you're probably going to come in fairly fairly hard here. So you're going to want to just watch and go from there. That's kind of where my head is with it. Candidly. I don't know. I think the home builders make the most sense, man, out of everything, because rates are going to come down. They're going to have to. Yeah, you're just going to be dealing with this for a while. Oh, we have tariffs today. We don't have tariffs tomorrow. No corporation is going to be able to spend money, and this is really the rub. This is really what you're going to have to watch. Like no one's going to make investment. No one's going to hire people. No one's going to spend CapEx. Like you're just not going to do it. So I understand like it makes sense that you would think, oh, I'll just buy Netflix or I'll just buy Spotify. I'll just buy anything that has what? Anything that has a number like this, I'll just buy. Because they don't have tariffs. They're a software company. You know, I don't know, man. I don't know how I feel about that. I don't know. It's why I keep looking at it, thinking that maybe you're onto something, but I don't think you are. I think you're too early. Yeah, I would be looking at European industrials. I really do think you have to look at that stuff. I actually think you have to look at SAP here. But something like a Toyota to me, I'm really surprised at this. Now, I have to read why. Like, are they going to build more in the US? Is that the point? See, I think a lot of these car companies are going to have a major problem. I have to go through the piece last night because I'm pretty sure he said if you're buying domestic cars, they're going to be tax deductible. I'm pretty sure that's what he said. And if that's what they're going to do, that's going to be absolutely huge. And when we see that, I don't know how else to say it. Like companies like Ferrari are toast. You know, they're going to have a real problem. You're going to have a 25% tariff and your car's not made here. And if I went and bought like a Ford GT instead, that's going to be tax deductible. Like that market, like even the high end where you have like Audi, VW, like all that stuff's going to be massive issues. So I think that companies like Ford or GM, like it's absolutely huge for them, but I want to make sure that I got it right. Because I'm pretty sure that's what I heard. You know, I have to go back. I made a bunch of notes. Also, I think like steel's going to go through the roof, but I'm pretty sure of that's what he said. Like there's going to be tax deductible. Well, why? I mean, seriously, like guys that are out there going and you want to spend and you want a high end car and you think the high end car market's not a big market. It is. I think Ferrari does like $4 billion or $3 billion in the US. And all that money is going to go into like GM and Ford because wait a minute, I'll buy a high end car from them and it's tax deductible, the whole thing. And I don't have to say that I don't need a car that's over 6,000 pounds anymore. So I don't need like the G-Wagon for the write-off. I don't think people understand how big that market is. So I don't know, man. There's some things out there that you really have to understand. And like, I don't know that European high-end taxes and like that stuff's coming off. I'm not sure it is. I think there's a lot to that. I really think you have to, we really got to take a look at that. Yeah, this looks great. I don't really follow this name, Ipsod Volume 2, but I don't think people really understand how big that's going to be. I don't think people get that yet. It's a real problem for Ferrari, like real. Yeah, I think they're bottom fishing ahead of, you know, there's supposedly this turn from GPUs to what, ASICs or and AMD is supposed to benefit from that, and you're going to get a read. Thanks, John. And you're going to get a read on that from Marvel tonight and AVGO tomorrow. And I think that's why they're playing this. You know, I'd rather be poked with a fork than buy AMD, to be quite honest with you. Like I don't really understand like why I would even bother. Like for what purpose? I'm not saying it doesn't go higher, but like where do I go? Like like where am I going? You know, like I mean, maybe you go there, maybe you bounce, but it's consistent selling. Like they can't get out fast enough. So you know they're going to short every rally. So like, why do I want to fight that? I just don't. You know, there's so many other names, Kev, and it could move on Marble, Kevin. It could do well. MMTW. Percentage of stocks above the 20-day moving average. You want to go over this? I look at it like this. So I'll show you how I view it. I view it all together. I think it's just easier. So first and foremost, you have a couple things here that you really have to watch. So we have broken the 50. And when you break the 50, the long-term trend changes. So like the way that I view it is this. I'll go over it tonight probably. The way that this goes is here's the 50. Okay. You're going to have to work, buddy. And when you break that, it's not normal to break that. And when you do, you can get something like this where it gets worse for like a month or two, which is actually awesome because when it comes back out of it, you can make a killing. But when you break like that, like it's not good. You go through periods of like, okay, well, maybe you're going to base in here, but you really just want to trade it. Now, on top of that, institutions watch this one like a hawk. And it's really a self-fulfilling prophecy because they trade on it. Once you break 50, you're toast. Like they literally just step away. And you can almost see it perfectly, right? Like as soon as they break 50, they step away. As soon as they buy back at the 50, they start buying again. Breaks 50, they're out. It's really that simple. What I would say and how I look at it is like with the 20, you're in limbo and it's weak, but you're not at any extreme reading. It leads to the 5 where you're like, oh, okay, I'm at a 15. You usually see short-term bounces when you get to single digits, which, maybe you get a really bad non-farm payrolls and there's some kind of bounce after that flush. That's how I would view it. The dollar's going to continue to stay down, I think, Ed. I do, Alan. I do think it does do that. I do think that you get a bump there. Yeah, you usually do. ANF was apparently a dumpster fire. I'm so far behind on all the research, man. There's so much going on. I didn't even read this yet. To me, it looks pretty bad. Maybe from a technical point, I'll take a look at trading it. It's very clear that there's a problem there. Let me go to this for a second to see something. Can you just do what I need you to do? Please, thank you. Grumpy today, man. I don't know why, but just I am. Grumpapus. I think ANF's got problems. I mean, when they investigate you for sexual harassment, it's probably a problem, right? I wouldn't touch this, man. I would just want to see how this goes tonight. I think Marvel could be great. I think AVGO is going to be great. I don't know that you want to be there right now. I'm not so sure that you're going to see any kind of rally. I'm very surprised. I'll tell you why I say this. Like CRDO crushed. Like absolutely crushed, raised guidance by 15%. This was a blowout. I'm down $4. So, I don't know, man. Like, I don't know. Like, I'm not saying it's going to stay down. Like, it's pretty interesting to me to look at, but you start thinking about like, do I want to be in these names going into earnings? Like, oh, Marvel's bidding up. So, and it's back from here, like you're at 80 or 90 and you were here at 120. So you're down a lot from that blowout. Same with AVGO, like you're down a lot, but I don't know. Not the way they're acting. I think you have to be super careful. I wouldn't go near this. I'm actually looking for an area to kind of short it. I was trying to short this the other day. I don't know that I want to do anything with it. Like the way that I would view BABA is this. Like I think it's pretty clear there's 2 areas of interest in this chart, right? There's that golden week area down here, which seems like maybe that'll be support. And it's here if you break out. So like if I don't break out here or I don't touch here to hold support, I have zero interest in that trade. You're just in limbo. It's a waste of money. Like to me, it's just a waste of money to be in here and see if I'm going to buy it or short it and then come up and it's $4 in my face, or I'm going to go, long here on the pullback and then come in and now it's down $8. It's a nightmare. Like it just is. So that's how I view it. It's bad, dude. It's bad. I think that the breadth is kind of weak to do it. I think that these numbers being worse than expected are going to make the things even worse. The question is, are you going to break major trend lines? I don't have an answer to that, man. I don't know. I'm about to find out like the rest of you. I would say this. You had some really good news in crypto today, like really good news. And this thing's up $2. And you're flat. CRDO crushed and it's down. Like, you're having good news and the market's not responding to it. So you have to think about it from a sentiment standpoint. So like, I always look at the market and say, am I oversold or am I overbought? And then that allows me to go where I want to go. My demeanor completely changes when I see companies crush like this and they're just blowing them out. This reminds me of, like, I saw stuff like this before. We've all seen stuff like this before. They're crushing, and then nobody cares. They're just, oh, cool, get me out. They're using the good news as liquidity events. And when you start to see that, like, you can't pretend you don't see it, right? I mean, how great was this quarter by Snow? Liquidity event. You're like, okay, well, that didn't work. I thought this was a really good quarter. Liquidity event. And I think it got a bad rap, but I think it was a really good quarter. So I think like that kind of stuff, like when you start to see it and you know what you're looking for, like net, really good quarter. Couldn't wait to get out of that one. UPST, really good quarter. Thank God. Where is that? I was going to say, oh, Jesus. UPST, really good quarter. We better get out. And this is when people get wiped out because they don't understopped. Blue, absolutely crushed. Lower than where it was. So when you start to see that, like, I tend to want, like if I was in a normal market right now, I'd be leaning heavily on some of these names going into earnings. I'm not in the normal market. And if they want to sell, they're going to sell. So can you short? Can it always get worse? Man, it can always get worse. It can always get worse. Heck, I remember buying Bank America and people couldn't figure it out. We were buying Bank America at $5 and people couldn't figure it out for the life of them. Like, you almost didn't want to buy it because you couldn't figure it out. But it was like back here and we were buying it and like literally it was the credit card business and the rest of it was garbage. And we kept looking at it going, like, it's just sitting there. It made zero, like, and it wasn't there for like, it wasn't there, man, for like a day. It was there for like months in this area from like, what was it, August to January? Like, it made zero sense. And you felt like silly because you couldn't figure it out for the life of you. Like, why can't this thing rally? So the market can remain irrational up and down longer than you think it can. When people, we have fear and greed, it can. So yeah, man, it can always get worse. Yeah, you can always get a worse reading. Yeah. So, but you would short the rallies. Bro, it was bad. I think the easiest trades out there are buy bonds and short oil. I think they're the easiest trades out there. I mean, the three easiest trades, right, are buy European defense names, buy bonds, short oil. I'll see you in 3 months. Like they seem like the no-brainers. What's up, Bob? It depends. Depends who's yelling at me. All right. Thanks, Bob. That one took a while. Oh, I don't know. I can't go near this. I can't go near that. AHR. I have no idea what's going on with this, but you have my attention. That totally has my attention. This is the kind of stuff you want to start looking for. Is it dividend? Did they increase the dividend? You got to look. I would want to know what's going on here. That's a lot of buying after, man. That's above like all my scans. I'd want to know why. That's very interesting. I got to get organized here, man. Got to get it together. Get it together. That LRN forewarned. I'm not saying not to that. If you're in it, congrats. And I would just keep moving my stop up. But I don't know, man. Like, it's holding for now, but I mean, how's that going with every other software name, bro? Like every other one. Sue calls me bro all the time. CQP. You can't go near this stuff. Like you can see them liquidating it, right? Like they started with financials yesterday. So I'm not going near it. It's pretty much what we got right now, bro. What's up, Steven? I know you're rocking that 2X. You're going to have sellers across the board in tech. High beta sells. Well, that's what I'm saying. You're going to get a real number Friday. And I think people are going to be like, what's this? Well, that's just what it is. That's why it really is. I think they're going to get tons of stuff like that. I would like to see them get a European contract, and I think the stock goes higher. I think you have to be very careful today. I think that, but I think you're going to have a problem today, man. These usually don't go in ones, so I would just be careful. What time is it? I got to go, guys. Hey, Tone, I'll do these real quick. You got earnings tomorrow. Like, you got earnings tomorrow, bro, so it is what it is. I think they're going to absolutely crush. And if you have a long-term outlook, I don't think it matters. If you have a short-term outlook, I'll do you a favor. Go and take a look at every single time that AVGO comes out with earnings and tell me what the NASDAQ does. I'll give you guys something to do today. So I'm going to run through these super quick, but I got to go. SMCI, the reason SMCI will go up is because there's too many other things to short. When the director of a corporation sells every single share he owns at a 70 or 80% discount to the high, you need to get out of the stock. They will. Ford makes a Ford GT. That's an awesome car, and it's very high end. Oh, I disagree with that, dude. Right, but you'll sell more Ford GTs. I totally disagree with that. I know guys that buy these cars. I'm not going to get into it, but like, I'm just going to tell you, if you have like all these cars on order, like you buy this one and that one and this one, and you're looking at spending a couple $1 million on cars, which is what these guys do. And it's over like 2-3 year periods as the new ones come out. And you're like said, oh, I know we said 2 million, but it's actually 2.5 with the tax. And by the way, our cars aren't tax deductible. How fast do you think they start selling Ford GTs? You know how many Ford GTs you're going to see on the road? A lot. I got to go through that. I really have to read what he said last night. Bro, we've been in a recession. I think DAX goes a lot higher. No, I bought Poland, and I think Poland's the right move still, but I think the DAX goes a lot higher. I got to jump, guys. I'm super late. Trade to win today.